Let's talk about something that affects millions of us, but that we don't always fully understand: corporate health insurance. It's a huge benefit, but the true cost can feel a little murky. So today, we're going to pull back the curtain and look at the real numbers behind your company's health plan.
It's a great question to start with, right? Who really pays for your health insurance? You see that deduction on your paycheck, and it's easy to think that's the whole story. But trust me, that's just the tip of the iceberg. The full picture shows a way bigger financial commitment.
So here's the deal. In most cases, your employer is covering the lion's share of the cost. We're talking somewhere between 70 and 80% of the total premium. To put that in perspective, for every single dollar you contribute, your employer is probably paying $3, maybe even $4 on your behalf. It's a pretty massive contribution. Okay, so percentages are one thing, but what does that actually look like in cold, hard cash? This is where you really start to see the scale of this benefit and, honestly, how much it impacts a company's bottom line. For an employee who's on an individual plan, just for themselves, companies are typically paying between $7,000 and $9,000 every single year. I mean, just think about that. That's a huge investment in each person's health, and that's before we even get to their salary. And if an employee enrolls their family, whoa, the cost just skyrockets. The employer's contribution can jump to anywhere between $17,000 and a staggering $26,000 per year. The sheer size of that number for family coverage is a major factor in a business's expenses.
But of course, these are just averages, right? The actual cost isn't some fixed number. It can swing pretty significantly based on several really crucial factors. So let's break those down.
So there are 4 key things at play here. First, the size of the company. Bigger companies can spread risk across more people, which often gets them lower premiums. It's kind of like buying in bulk. Second, the type of plan itself makes a huge difference. Third, employee demographics. A younger, healthier workforce generally means lower costs. And finally, location matters. Healthcare prices can vary dramatically from one state to the next.
Let's just zoom in on plan type for a second, because this is a classic trade-off. A PPO plan gives you way more flexibility with which doctors you can see, but that freedom comes at a higher price. An HMO, on the other hand, is more restrictive. You got to stay in their network, but it's a more cost-effective option. This choice is one of the biggest levers a company can pull to manage its healthcare budget.
All right, we've talked about all the factors and the averages. Let's make this totally concrete. We're going to take a typical family plan from recent data and see exactly how the numbers add up for everyone involved. Okay, so let's do the math on a typical family plan. The total premium, the whole shebang, can be around $25,000 a year. Now, if we apply that 75% rule of thumb, the employer is paying for about $17,000 to $19,000 of that. That leaves the employee's share at around $6,000 to $7,000 for the year.
And how does that employee share get paid? Well, for most of us, it's that familiar process of automatic payroll deductions. That $6,000 or $7,000 is broken up over the whole year and taken out of each paycheck. That's why we usually only notice the smaller periodic amount and not the full annual cost.
So why are we digging into all these numbers? Why does this matter? Because honestly, understanding this financial breakdown is empowering knowledge for everyone, from the CEO all the way to the newest hire. The research we looked at puts it perfectly. It says, understanding these averages can help companies and employees plan for healthcare costs. It's so true. When both sides really get the true costs, it just leads to smarter decisions about benefits, budgets, and even career choices.
So, let's recap the big takeaways. For employees, this knowledge is power, especially during salary negotiations or when you're comparing job offers. For businesses, it helps you benchmark what you're offering against everyone else. And for all of us, it just brings some much-needed clarity to one of the biggest expenses in our lives.
And that brings us to our final thought. Now that you've seen the numbers behind the curtain, the thousands and thousands of dollars your employer contributes for you, how does that change the way you value your benefits package? It's definitely something to think about. Thanks for tuning in.